For more stock news updates, remember to press the like button and subscribe. With that being said, let's get straight into the video. Energy Transfer, listed on the New York Stock Exchange as ET, has once again revised its annual guidance upward following the announcement of its Q2 results, showcasing the company's robust operational momentum. This year, the stock has delivered a return of over 20%, including dividends. Despite this impressive performance, the Master Limited Partnership still offers an appealing forward distribution yield of approximately 7.9% and trades at an attractive valuation, making it a noteworthy option for both current and prospective investors. The pipeline company has experienced significant growth in volume across its divisions, with crude oil transportation volumes increasing by 22%. This surge reflects the strong demand for crude oil and the company's ability to effectively meet that demand. Additionally, volumes for crude oil terminals and natural gas liquids fractionation have each increased by 11%, while refined product volumes rose by 9%. This comprehensive growth in multiple segments led to a nearly 21% rise in adjusted earnings before interest, taxes, depreciation, and amortization for the quarter, reaching $3.8 billion. Such impressive figures underscore the operational efficiency and strategic positioning of Energy Transfer in the competitive energy landscape. Distributable cash flow to partners, which represents the cash generated before growth capital expenditures, was $2 billion, marking an almost 32% increase from the previous year. This substantial growth in cash flow is a positive indicator of the company's financial health and its ability to generate returns for its investors. The company also raised its per-share distribution by 3.2% year over year to 32 cents, further demonstrating its commitment to returning value to shareholders. In the quarter, Energy Transfer distributed $1.2 billion to unit holders, resulting in a distribution coverage ratio of nearly 1.7 times based on its distributable cash flow. This ratio is particularly important as it illustrates the company's ability to comfortably cover its distributions, providing reassurance to investors regarding the sustainability of these payouts. After these distributions, the company retained about $800 million in surplus cash flow, allowing it to maintain financial flexibility. Furthermore, it allocated $549 million towards growth capital expenditures during the same period, ensuring that its distribution remains well supported while also investing in future growth opportunities. Looking ahead, Energy Transfer has increased its full-year earnings before interest, taxes, depreciation, and amortization forecast to a range of $15.3 billion to $15.5 billion, up from a prior estimate of $15 billion to $15.3 billion. This updated guidance reflects the acquisition of WTG Midstream and the strong performance of its core business, indicating that the company is not only growing organically, but also expanding through strategic acquisitions. The forecast includes $100 million in transaction costs related to the acquisition, highlighting the costs associated with growth initiatives. Furthermore, the company has raised its growth capital expenditure guidance to between $3 billion and $3.1 billion, up from the earlier range of $2.8 billion to $3 billion, which suggests a robust pipeline of projects aimed at enhancing its infrastructure and service capabilities. Energy Transfer's stock trades at an appealing forward enterprise value to earnings before interest, taxes, depreciation, and amortization of just 7.3 times. This valuation is significantly lower than its Master Limited Partnership counterparts and below its pre-pandemic valuation, presenting an attractive entry point for investors. In comparison, the midstream sector as a whole is trading at a discount relative to the average enterprise value to earnings before interest, taxes, depreciation, and amortization of 13.7 times recorded from 2011 to 2016, indicating that Energy Transfer is positioned favorably within its industry. Moreover, Energy Transfer's balance sheet is in robust condition, as indicated by a recent upgrade of its senior unsecured debt by Moody's. This upgrade reflects the company's strong creditworthiness and financial stability, which are crucial for long-term growth and investment. Additionally, its distribution coverage remains strong, providing a solid foundation for future distributions to unit holders. The company is strategically positioned to capitalize on the rising demand for natural gas, driven by increased power needs associated with the expansion of artificial intelligence infrastructure. Energy Transfer noted that it services 185 gas-fired power plants across 15 states and has recently secured agreements to supply over 500,000 million British thermal units per day. This extensive network not only showcases the company's operational scale, but also highlights its critical role in supporting energy needs across various sectors. Furthermore, Energy Transfer is currently in negotiations with data centers that are looking to enhance on-site generation capacity. The combination of growth stemming from increased natural gas demand and potential valuation increases makes Energy Transfer one of the most intriguing energy stocks in the market today. Investors get a nearly 8% yield to boot, which is particularly attractive in the current low interest rate environment. In conclusion, Energy Transfer has demonstrated strong operational growth with significant increases in volumes and cash flow, leading to an upward revision of its annual guidance. The company remains well positioned to capitalize on rising natural gas demand and offers an attractive distribution yield, making it a compelling choice for income-focused investors. The strategic acquisitions and investments in infrastructure further bolster its growth prospects. Overall, Energy Transfer presents a unique opportunity for investors looking to gain exposure to the energy sector while benefiting from solid returns. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.